Hey everybody, what's going on? It is James here with Crypto Common Sense, and I have your Bitcoin slash cryptocurrency update for January the 12th. So first things first, guys, it's been a while since I was on YouTube. For those of you that did not join the Facebook group, just a quick heads up. There was some disagreement with another YouTuber. They filed a bunch of DMCA requests against me, and it took me a while to get that resolved. Eventually, he and I came to an understanding, and he did the right thing and removed those. So I appreciate him stepping up and doing that. And, that's just the way it's going to be. I'm not going to dwell on that. We're going to move forward. The other thing that happened, for those of you that are not in the Facebook group, is I found out on January 8th that I broke my neck. Crazy story. I'll make a long story short. I was getting into a car. I don't usually drive a car. I drive an SUV. I didn't duck enough, slam my head on the top of the door frame getting in. Basically slammed my head forward into my chest and fractured my C1 vertebrae. And I'm going Monday for a MRI to find out if I tore I can't remember the name of it, but it's the ligament that basically keeps the spine from being compressed. And if I find out that I tore that, they're wanting to do a C1 C2 fusion, and which is a life-altering event because it reduces the range of motion in your neck by 50%. Not to mention, it's just kind of freaky that somebody's going to be cutting into the back of my neck and drilling into my spine. So fingers crossed the ligament is not torn, but they're thinking it is because I'm having blood pressure issues. When I lay down, my blood pressure drops, and when I stand up, my blood pressure spikes. So not good. But anyway, let's talk about Bitcoin and what the market is doing, because I know for those of you that are on YouTube and not in the Facebook group, you've probably been wondering what the hell's going on the last 4 or 5 days. So let me kind of give you my take on things and kind of explain what I did and what I'm doing currently with the market. So the first thing that I want to point out here is this is a daily Bitcoin chart, and we have two different divergences on this chart, and they're both bearish. So I know a lot of people I've been on Twitter and things, and I've seen, people are getting bullish and stuff, and I don't think they're crazy, right? If there was ever a time to be bullish in the last 6 or 7 months, I think this is it. Now, I'm not bullish, right? But at least I understand why they're bullish. When you get a 25, 30% pump and it starts to consolidate above support, which this is support right here, that is bullish in nature. But we've got to look at the bigger picture here. And number one, we had this blue line. Okay, I'm going to put this on a line chart so it's easier to see. We had price make a significantly lower high while at the same time making a higher high on RSI. Now, when you're in a downtrend on the macro level, that is what's called hidden bearish divergence. And that's a sign that your trend is getting ready to continue. In this case, a downtrend. So you would be continuing down. Then on top of that, to confirm that things are looking bearish, yesterday when this candle closed down here, it actually confirmed this regular bearish divergence. So we had price make a higher high while RSI made a lower high, and that is regular bearish divergence. That's not what you wanted to see if you are a bull. On top of that, the price is sitting underneath this orange line. That orange line is the 200-day exponential moving average. So it's the 200 EMA. And it's been acting as firm resistance over this last week or so. So what I did was, when this thing pumped up back on January 7th, I had been talking about for a week that I thought I could pump up to 8,100 or even 8,500 and test the 200 moving average on the CME charts, which is exactly what it did right here. It tested that 200 moving average also. That happened to be the golden pocket, the golden short zone. So I cracked open a short at 83.03. Now, why 83.03? Because I cracked open half at 81.80 and another half at 84.32. Not half a Bitcoin, just half a position and half a position. So the cost average was 83.03 or 83.06. I don't remember now. All right. When this thing dumped towards 7,800, I closed about 90% of that short, and then I had a 10% left that I had a trailing stop loss on, the 81.97. So unfortunately, it did pump back up and stop me out, which was a little frustrating because I was up an extra 7% before it did that. But it was only 10% of the trade. The rest of it worked out beautifully. So not going to complain too much. I'm not currently in a short position or a long position. There's a couple of reasons for that. The main one being this deal with my neck. On Monday, if that MRI goes bad, they're going to want to send me right now. They said that they would like to send me straight from that MRI to a hospital about 2 hours away that specializes in this sort of thing, because it's actually if it's what they think, it's life-threatening. Okay, so they got me in this neck brace right now that basically my neck can't move, and I have to sleep in it, and I have to eat with it on, and the whole 9 yards. So it's a pretty serious deal. It's much more serious than what I had initially realized. They called me on Friday and then basically said, hey, you need to be very, very careful, because if this is what we're thinking, you could actually paralyze yourself, or even worse, if you move your neck the wrong way. So needless to say, it's been a freaky 48 hours. But that's why I don't want to get into a short, because if they take me from there, I won't be home. And obviously I won't be able to trade. So I don't want to get caught with my pants down and get nailed on some kind of weird wick or something. But I am bearish. And, if it wasn't for that, I would certainly be hunting for short setups. So the CME on Friday closed at 81.25. It's going to be opening less than 12 hours from now. So that's kind of the price that I would keep an eye on. Price likes to do this thing where it goes up and down, up and down, and up and down. But more often than not, it closes right around, and opens right around where it closed the previous Friday. Except these last 4 or 5 weeks, it's always left these big gaps that need to be filled in. So, what I would watch is if there's a gap, if it goes up and there's a gap underneath it, might be another reason to fade that gap, meaning short that gap. If it goes down, it could be that it wants to go up and fill in that CME gap before further downside. So even if I was going to take a short, I would wait. And this is me personally. I'm not telling you to do this. But me personally, I would wait until that CME opened and just see what, price action is doing. I wouldn't get into a hurry and rush into a short on a Sunday, okay? Because the market Mondays tend to be very volatile, and they tend to go hard one way or the other, but you often get an idea of which way it's going to go when the CME opens. So that's kind of the daily chart on Bitcoin, and that's kind of what I see going on with the CME chart. If we take a look at the 3-day chart, now I did a video on this for the Facebook group, but if you missed it, basically what I had said is after you get these big wicks like this, it's very common to get another candle right after that tries to eat that wick. Okay, so you can see you had a big wick, and then another one, big wick, came up, was trying to eat it, and then collapsed. And this one right here, same thing, right? Well, not that one so much, sorry, but this one right here, same thing. Another wick came up and then collapsed. So we had this great big wick and this really nasty looking candle. This could be called a number of things. To me it looks like a shooting star. Other people might call it a gravestone doji. Other people might say it's an inverted hammer. Whatever you call it, it's a bearish candle. Okay. Basically what you want to see after this is you want to see the next candle not eclipse the top. So far that has not happened, and we're also still inside of this downward sloping channel on the 3-day chart. So people, like I said, I don't understand, I do understand people getting bullish, but in my mind, we're still in a downward channel. There's real no reason to get overly bullish until we break out of this thing. Okay. Now the reason they're bullish is they're drawing their lines differently than I am, and that's fair enough. Okay. But so far this has not been able to eclipse this high, and it looks like it's going to end up failing. Also, keep in mind that this is the 3-day RSI box that has been so accurate in predicting these tops over the last 6 months, and was also accurate in predicting the tops in the 2018 bear market. We're sitting right at the tip-top edge of this, okay? So it's very possible that when this candle closes, we're going to close inside this box. Now, this candle opened on January 10th, which means it actually closes in 12 hours and 1 minute from the time I'm doing this video. So 12 hours from now, we'll know what this is going to look like. And if it closes inside this box, that would be another reason that I would want to go short if it wasn't for the neck thing. Okay. But if it closes above that box, that would be the first time it closed above that box since this whole bear market began, and might be a bullish sign. We just have to be careful because look here. Did that same thing in the summer of 2018, had this false break above it. People got bullish. I remember I got bullish at that time. It was the summertime of last year. Well, I guess almost 2 years ago now. It's crazy. And then it just completely dumped and crushed everybody. So I will be keeping a close eye on that as well. Okay. As far as targets go, what am I looking at for Bitcoin? What do I think we're going next if we go down? Well, here's what I think. I think if we put this thing on a log chart and we draw a trend, just say, you know what? Let's look at the macro trend, the trend from June until now. This is what we get. We get a top, we get a pullback, we get our first lower high, and here's our targets. Okay. if you haven't seen the other videos in the Facebook group, you haven't seen this before, but essentially in 2018, these targets, let me take these off for a second and show you this. These Fibonacci levels, these trend extensions, were adhered to almost perfectly. You can see here that the first extension was nailed almost perfectly. Right here it bounced off of it, came down to the 1.272, bounced off of it, came down to the 1.618, bounced off of it, found resistance at the 0.618, right? Played around, consolidated on which number? Look at this, 1.618 is where it was consolidating at before it finally capitulated and fell down to the 2.618, right? If you'd have went long on the 2.618, you'd have bought the bottom of Bitcoin. Amazing, amazing stuff. Now, let's put the same trends on the current bear market and see what we get. Well, we get our top, our first low, our first lower high, and let's extend these out so you can see where they line up with. Extend, bam, okay. Now I'm going to zoom in. Well, no, I don't want to move that. I just want to zoom in. All right, so you can see here that the one level, bam, look at that, was respected, bounced right off of it, back up to the 50, respect again, bounced up to the 25, played around a little bit in this range here, and then dumped. Where did it stop dumping at? The 1.618, just like it did in 2018. Okay, it's been consolidating along this line all through here, and it even came down and touched the 2, which was a little lower than it went in 2018. Right now that it's come back up, you see where it's getting jammed up. It's getting jammed up right at this 1.272 fib. Okay, or fib extension really. So if we capitulate from here, if this was a dead cat bounce in a bear market, which is what I think it was, if we capitulate, the next target that looks the most promising to me is going to be the 2.618, which is right here at $5,110. And this is where things get really interesting. Let's change this to a weekly chart. Let's put a 200-week moving average on it. Look where the 200-week moving average is, right there. Where does it line up with? The 2.618. Okay, now I want to be very clear about this. This does not mean that the bear market is over if it gets to that level. What it does mean, however, is in the last two bear markets, the 2015 bear market and the 2018 bear market, that 200-week moving average was the bottom. I suspect that we will find support at that level. Now, will that be the bottom and just go up from there? That I'm not so sure about, right? I would still really like to come down and fill in this liquidity gap back here for sure. And I'm still not ruling out the fact that we could put in a lower low like we did in 2015 and this was a false bottom, okay? So those things are still in play. But I do think it's most likely that we will find at least temporarily support here, meaning that we might bounce off of this and maybe even go as high as like 7,500 all over again, right? Before more downside. That's one possibility that I see. Another plausible scenario is that we break right through this thing, that we come down all the way to 4,000, right? Get rid of this arrow for a second. Oh goodness, get rid of the arrows. Okay, well I don't know when I drew this arrow. Let me just delete it. So another plausible scenario is it comes down, breaks through that, capitulates all the way down to 4,000, maybe even 3,500. We do have gaps on the CME chart down around 3,500 bucks. Then we'd have a 200-week moving average that looks something like this, and then we could see it come back up and do one of two things. It could come back up, find out that this is a bearish retest, and get further downside, and that's how we would end up with a lower low. Or it could come right back up. This could be a false break, basically a huge bear trap, and then bam, break right back above this line, retest it bullish, and then keep heading up into the halving, right? I think of these two scenarios, after witnessing how strong the market has been this last 6 or 7 weeks and how much it really did not want to go down any further, I tend to lean toward the scenario where we will not put in a lower low. Now, I was very, very bearish, and I really thought we were going to go down to 1,000 or 1,200 bucks, but we got so much strength during this consolidation. This was so much harder to move down than what it really should have been, that it makes me lean a little less bearish. It makes me lean toward the fact that maybe this will be support, be the bottom, or possibly come down, fill in these gaps, and then this be a big bear trap. And historically, there is, data that supports this idea of basically putting in what would be a giant double bottom. If we look at the BLX chart, which is the Brave New Coin Index, it has a lot of history on it, so we can go back and look at these things. This is exactly what happened in 2015, right? After it put in its initial bottom back in January of 2015 back here, it actually rallied up. It rallied up over 100%, okay? And then when it came back down, it actually basically retested its bottom. So you had this double bottom, okay? And for a long time, I thought we were replaying this, where we had a false bottom here and a false bottom here, and we were going to go way down here. Still think it's plausible. I just think it's more like 80-20 at this point. You know, this being a 20% scenario, and being more bullish, being 80%. So this is one scenario, but this is the other, right? We could just simply double bottom. And if you're wondering, well, how long did it take to double bottom back then? Well, this first bottom was in January 2015. The second one was 8 months later in August. This bottom was in December of 2018. So I would have expected this to happen sometime in 2019. It didn't, okay? But we know that market cycles are getting longer, so it's entirely possible that we're actually going to double bottom, in 2020 before the halving, and then all the halving people will get their wish and will run up into that halving. Very, very likely. Not likely, but very, very plausible. Okay, I'm still playing it level to level at this point. I am looking forward to being able to buy some of my spot back. I'm going to have to look at the structure and see what things look like, but I may start tiptoeing back into my spot positions down around this 200-week moving average, okay? Making those long-term investments that I'm not moving in and out of, but just holding and then using that to trade altcoins to stack Satoshis or stack sats, as they say. All right, so that's kind of what I'm seeing on Bitcoin. Let's go over and look at the total market cap real quick. So the total market cap, let's get rid of the 200 moving average here, and let's make this a 3-day chart so it's a little bit cleaner. Let's draw a trend. We draw our trend from back here to this first dump, and then our first pullback. We get some trend targets on there. And it looks like right now we have basically, we had found support on this level here. I don't know which level that is, the 0.786. And it looks like the trend target is 148 billion for the total market cap. I like that number, I guess, right? If we drop from where we're at, that'd be about a 30% drop. 30% drop if Bitcoin dropped, roughly the same amount. That would be about 20. I don't know how much Bitcoin is right now. About $2,400 or so. So put us down around low 5,000 range. I like it. Makes sense mathematically. Okay. If we take a look at the altcoins on the total market cap, altcoins looked really good yesterday. Really, really good. I was very excited for those altcoins, and for anybody that was in any alt positions, it was a pretty good day. It had been finding resistance at this 2.0 level at 64 billion, but it was able to break above it yesterday, and it's still sitting above it now. So I don't know what's coming with alts, right? I think it was a dead cat bounce. I mean, that's what I think happened. I think people probably got sucked in bull traps, but I am watching this closely. I want to see if it can stay above this level, especially if it can close the week above that level. I don't know, maybe it goes up to the next level from there, right? Be pretty awesome for alts. And if you look at the Bitcoin dominance chart, it is losing dominance, right? It's just now finally starting to come back down to the 200-day moving average right here. Okay, so if this falls through the 200-day moving average, we could see Bitcoin take a hit while alts actually do move up, right? Now that's exactly what happened in January through April of 2018. Bitcoin took a hit while alts pumped. So I'm going to watch that with an interesting eye. Just to give you an example of some of these alts and how closely they're following these trend extensions, this is pretty wild stuff. So this was EOS, and I actually had a position on EOS. So this was interesting to me, right? It ran up. First, it stopped right perfectly at the 1, right? Pulled back, and then came up and just slammed right into that 1.272 and pulled back. I mean, if you don't believe in these trend extensions, you're really missing out. These things make the market so much more clean, and it makes it so much more, easy to say, okay, what's my profit target, and where should I be getting out of this trade? I love these freaking things. If there's one tool that I added to my tool belt in 2019 that's really helped me a lot, it was these. I didn't really start using these until I want to say May or June of 2019, right? And these things are just amazing. So I'm watching EOS, right? Because again, I'm still in my position on that. It's been a long-term position. I've had it since 2017. I've moved in and out of it several times, where I was selling and then buying back lower. But essentially, it's a free position, meaning I don't actually have any of my own. I mean, it's my money, let's just be honest. But I already made back what I initially invested in EOS. So I basically try to sell high and then buy back a little lower is what I've been doing on it. And I'm interested to see where this goes, right? I keep wanting to sell, but I'm waiting to kind of see what these alts are going to do because I don't want to get out at $3 and then the thing suddenly pop up to $4 or $5 on me. And if that sounds like FOMO, it is. It is a little bit of FOMO, right? But again, it's a free position, so I get to be a little bit more gambly, if you will, on this particular coin. Okay, so I'll watch it, and if it looks too rough, I may get out. But then again, I may just hang on to it. Again, I'm not going to be able to trade for probably. They said if I have the surgery, it's like a 3 to 5 day recovery time in the hospital. So that's a long time to be away from the desk, and a long time to be away from charts, and a long time to potentially miss a really big move in the market. So I don't care for that a whole lot. So I may just leave this alone. But it looks good. I would be watching that, and if it can break north of $3.12, I think that it could go up and retest the next level up at 332, right? If we look at Ethereum, same thing. Just playing to these fibs perfectly, right? So here is the uptrend. I had a target of $142. The first extension was 148.07. It pinged that sucker on January 8th. Perfect ping, and boom, collapse. Then it found support right on the 0.786, ran back up, pinged it again at 148.07. If you had Ethereum, you definitely should have been looking at selling. I'm not saying now, but hindsight being 2020, obviously. This was a double top, essentially. Not really a double top in the typical sense of an M like this, but when you see price stop at the same level a couple of times like that, it's often a good sign to get out. And the beautiful thing is when you get a clear signal like that, you can sell or short or whatever you're going to do and then just put a stop loss like 1% above it. So if you're wrong and it breaks above it, okay, well, you're going to lose 1%. But more oftentimes than not, when it does something like this, it's going to have a big pullback. It could be the top where it moves even lower down to like $100, or it could be, that just pulls back to the next fib down before moving up. But even if that was the case, if you were getting out here, you had an opportunity to buy back in this next level for $6.17 less per Ethereum. So 4% short position basically would have been a really great trade. Okay, so that's what I'm seeing on Ethereum. The next target up, if it can break back north, be $156, and that would put it above all this chop. And I think that would clear the way for it to really take a good run. Okay. Now, do I think that's going to happen? I don't. I think that this uptrend is beautiful to look at, especially on the smaller time frame. But I think really, if we look at the bigger time frame, we get a very different picture. We're still in a downtrend, and this looks like a retest of resistance. Okay. And the reason I say that is, well, let me just show you real quick. Look at that. You see how beautiful that is, right? This was the old level of support, came up, slammed into it twice, got rejected both times. So again, we break above that, I think it's going to clear the way for this thing to really take a run. Maybe as high as $170, $180 would be pretty amazing for Ethereum holders. But if we can't break above that, I think we're just going to continue our downtrend, and our downtrend looks like this. We got our first high, we've got our first drop, we've got our first pullback, and here's our trend levels. And basically right now you can also see that 2.618 is what's rejecting this, and if it continues down, the next target, the next lower low, if you will, is going to be somewhere down around $108 would be the first level that I would be watching. $108.19. And magically, if you look, oh wow, there's actually a little liquidity gap back around that same ballpark. Okay, I think if we look at the daily, it's a little bit lower than that. Let's see. Yeah, so here's the daily. There's the liquidity gap sitting right here at $106.02. So that would be the next level, that 106 to 110 area that I would be looking at if Ethereum continues its downtrend. Okay, and will it continue? I don't know, right? I don't know. I do know that it's been finding resistance at this same level in RSI. So a break above that level would be pretty bullish in my mind. I would watch that level at 58 to 59 RSI level. Okay, let's look what else ran up yesterday. I think everything did, I guess. I'm not going to do everything, but let's look at Litecoin real quick. That's a big one. If we look at Litecoin actually broke through some really key resistance levels. Let's get the RSI off of there for a second. These purple lines were resistances that I've been watching for some time, resistance and support. I wanted to buy down at 34.66. It didn't get there. That's kind of a kick in the gut, right? And that's just burst right through this first level of resistance, found support on top of it, and then shot up through the second level. And this thing's up like 40% if I remember right. It topped out at 45%, right? 45 freaking percent. I don't know how long it took. Let's see, 45% in 23 days. So yeah, I did not get any fills on that at 34.66. It bottomed out at 35.88. So it is what it is, right? There was no setup there. I didn't have a reason to buy other than gut feeling or wanting to get in, and I didn't even really have that. There was no reason to take the trade back down here other than, like I said, FOMO, and I didn't have that, so I didn't take it. And it's sure painful to watch that thing shoot up 45% without me, but shit happens, right? I don't think that it's anything more than a dead cat bounce. If you look, it's just coming up to retest this resistance. Sure, right now it's above it, but even if it's able to cut above that level, you got a whole bunch of resistance up through here. $54, $55 is going to be very, very difficult for it to break through. And again, if we zoom in and we take a look at its trend, make sure we turn the log off on the smaller time frames. If we draw this thing out, depending on how we draw it, if we draw it something like this, well, there you go, right? Pinged to 1.618 and collapsed. Does that mean that's it? That's all it's got? I don't know. It never means anything, right? It's just an indicator. It's just a ballpark. Okay, well, this looks bearish or this looks bullish, and to me, it looks like this thing topped out up around 51 bucks. But again, if the alts decide to run, Litecoin's got a lot of room to move, right? It could absolutely move up and start filling in some of this crap back here, all the way up to this 50. I would say even 60 bucks, right? So I'm not going to chase something. I'm certainly not interested in taking a long position on something that's up 45% in 3 weeks, right? That's not how that works, or at least not for me, not how my trading works. But, it's interesting to watch. The daily moving average, the 200 daily, is actually up around $67. So, it could go up and want to retest that thing. It's really fallen far away from that. And when you get too far away from that average, it does have a habit of wanting to come back and kiss it, right? Back here it fell underneath it and came back and kissed it. That being said, from April to December of last year, or 2018, it just had 8 red months in a row. So once it started falling, it really started falling. And that was one of the worst trades I ever did, was back in 2018. It's one of the lessons I've learned about using stop losses. I thought, what it goes down must come up, right? Not always true. Not always true. So that's kind of what I'm watching on Litecoin. And if we look at a 3-day chart and look at our log chart and draw some fib extensions, let's see here. I would call this the first move that I'm interested in. There's a couple ways to draw these, right? Depends on how you want to look at it. That's one way. Some people might say, I'm going to do this, right? This first down and this first up. That one looks better. I don't really like it as much, but let's go with what has more touches. This one has more touches. So if we're looking at that as the downtrend, right? I look at these perfect touch right here, right? All this beautiful support here, and resistance and support, and resistance and support. Yeah, this is probably the right one. Down here, it had a perfect kiss, almost, right? This came down to 35.88. The target was actually 35.61, and now it's moved back up, and it looks like it's sitting underneath the 3.272. So if this thing starts to move back down and put in a lower low, the first level that's showing up is going to be this $31.86, right? And then we'd have to draw even more extensions if we want to go past that. So we'd have to have like a 5.272 on there and a 5.618 on there, right? That gives us target $29 if it goes there, $26, right? So on and so forth. And then let's add one more. We'll add a 6 on there, and that'll be all I got room for. And the 6 would be $23.81, which would be beautiful because that would come back here and fill in this liquidity gap. Look at that. Where does that liquidity gap live at? It lives at $23.46, right? So I still think, until proven otherwise, that this was dead cat bounce and that eventually Litecoin is going to make its way down to 23 bucks. Okay, so I'm still not buying back my Litecoin, right? My spot Litecoin. And if I had bought it back down here, I would definitely be selling it and taking profits on that 45%. But again, I didn't buy it back. All right. So that's kind of EOS, that's Ethereum, that's Litecoin, that's Bitcoin. We're at 30 minutes. So I think I will go ahead and wrap things up there. Guys, it's good to be back on YouTube. Please do me a huge favor. Make sure you hit that thumbs up button. Make sure you subscribe to the channel if you're a new watcher. And of course, make sure you check the description for links where you can follow me on TradingView, Twitter, and Facebook. And as always, please remember, I am literally some guy sitting in a spare bedroom, so nothing in this video is financial advice. Nothing in this video is trade advice. You should always do your own due diligence before making any type of investment. This is James with Crypto Common Sense. Trade safe.